Two analysts just released their targets for Apple's stock price, one calling for a 25% drop in the shares and another one predicting shares are going to surge by 25% from here. Which is right, and how do you know when to invest in Apple? In this video, I'm doing a complete Apple stock analysis, including an analysis of the dividend. We're talking investing in Apple stock today on Let's Talk Money.
Beat debt.
Make money.
Make your money work for you.
Creating the financial future you deserve.
Let's talk money.
Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the community. Thank you for taking a part of your time to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. This is a video everyone in the community has been asking for, a complete rundown of Apple stock price and its dividends. While I mostly stick to strategy and those portfolio-wide decisions on the channel, Apple is just too big to ignore, so I thought I'd put together a quick video on what I'm watching in the stock and where it could go from here. Instead of just doing that Apple stock analysis though, I'm going to show you the most important factors in Apple's stock, the things that I look for. I'll run through the full analysis and reveal how you can follow the stock yourself in the future. Now, I loved doing that forward stock analysis in our last video, and a lot of you requested this analysis on Apple. What I want to reach out though and get your opinion. I loved my years as an equity analyst and venture capital, and I could talk about this stuff all day long. So I want your opinion though. Watch through the video and let me know what types of videos you want to see on the channel. Would you rather see those kinds of strategy and portfolio-wide decisions, or these kinds of in-depth stock analyses that we're covering now? So scroll down and let me know in the comments below what kinds of videos you'd like to see. Now, it's easy to see here why Apple investors love the shares. The stock only pays a 1.5% dividend, but has produced 17% annualized returns since trading in 1980. Over the last decade, shares have surged 25% on that annualized basis for a 9-fold return on your money. But like most stocks right now, shares of Apple are looking a little expensive. The graphic here shows that Apple stock is trading at 16.8 times the company's earnings, which is down from 18 times last year, but still on the high end of this history. There have been several times when the shares traded as low as 10 times earnings or even 12 times earnings shown in the last few years. Now, the market expects sales of Apple products to be up just 1.5% over the next year to $262.3 billion, so not that kind of top-line growth that makes you feel good about a stock. More importantly, though, the street expects Apple earnings to be up just 0.76% over the next year to $11.98 per share. Now that means any increase in the stock price is going to have to come from that higher price to earnings ratio, an increase in that 16.8 times investors are willing to pay for the earnings. Of course, the good news is that Apple has a history of beating those expectations for earnings. Through managing those expectations for profits, Apple is almost always able to surprise on the upside when its quarterly earnings get released. Now that upside surprise isn't huge, about 4.6% higher than expectations on average over the last 8 quarters, but it does mean that the company could report around $12.58 per share in earnings over that next year period. Now that would bring the current valuation down to 15.9 times earnings and leave a little bit of room, not much, but a little room for upside in the stock price. Now let's look at some Apple dividend analysis. Then I'm going to walk you through some of those fundamentals that are really driving this stock. And now, honestly, Apple isn't much of a dividend stock, paying just 1.5% yield annually. Currently, that means you get about 77 cents per share dividend each quarter, or about $3.08 total every year. The upside to this is that Apple has a huge stockpile of cash, so it's been increasing the dividend steadily over the last few years. Now, Apple grew its dividend payment by an average 11% over the last 4 years, though this year it looks like it's going to come in at about 9.2% growth. Apple is paying out about 23% of its earnings for that dividend, so still lots of room to increase the dividend, but management seems to be favoring share buybacks instead. Last year's $13.7 billion in dividend payments was a nice little cash return, but nothing compared to the $72.7 billion Apple spent to buy back its own shares. That share buyback program goes a long way to explain how Apple can consistently beat earnings expectations on that per share basis. Essentially, if you buy back more of your shares, your earnings are spread across fewer shares and your earnings per share increases. Apart from this bit of financial engineering though, Apple has some really strong finances. The company produced $64 billion in free cash flow last year and has $80 billion in balance sheet cash against $90 billion in debt. So those are the numbers behind Apple's stock and the dividend, but let's look at some of that deeper analysis. What are some of the larger issues driving the shares, and how can you follow the stock in the future? Now with Apple, we do run into a little bit of a problem. Those of you in the community know I'm always preaching that you should compare stocks within the same industry. So you compare tech stocks with tech stocks, utilities with utilities. Companies in different sectors just trade on different metrics, and you need to be comparing them so you're comparing apples to apples to get a fair value on each. That's tough to do with Apple though. Is it a tech company or a consumer goods company? If you looked at other companies in the tech hardware space, then Apple's price to earnings ratio of 16.8 times its last 4 quarters of earnings looks a little expensive considering that the industry trades for about an average of 15 times earnings. Looking at it as a consumer discretionary company though, so maybe compared to some of those specialty retailers in the space, the shares could be slightly undervalued. So you have to take more of a blended look when you look at Apple shares. While the company does compete in a pretty commoditized market for hardware, meaning there isn't a lot that separates companies on function, there are a few unique ideas that sets Apple apart from its competitors. First is just that Apple's relatively closed operating system, that iOS system, makes switching difficult for consumers. That strong brand also allows it to charge a premium on its products. Now the iOS ecosystem, so that interoperability among all its different products means once Apple has you in one of its tech, it's a good chance you're going to be buying some of those other products. Now on the news front, it looks like Apple sales in China have been improving a little bit on that recent price cut in emerging markets. Those sales and phones sold are still likely going to be down over the last year when the company reports its second quarter results. Remember, China is 20% of Apple's total sales, so this is a huge chunk, and I think we've yet to see all the pain from those recent trade tensions. Another bombshell was dropped lately that longtime chief designer Johnny Ive was leaving the company. Now this is huge because Apple's brand has always been built around that unique design, and Ive has been at the center of all of it. He's been at the company for more than 30 years and has been instrumental in everything from the 98 iMac redesign to the iPhone itself. It might not be quite as bad as it seems though, because Ive is leaving to found his own design company and is reported to be still working with Apple on its products. Now, even though Ive is said to be working with Apple going forward, it's not going to be the same kind of relationship that you had before, so you have to ask yourself if Apple's design bench is strong enough to get through this transition period. So for Apple investors, the stock price has always been about that hardware cycle. If you look at a 10-year chart of Apple stock price, you immediately see where it took longer to release those new iPhones or when a product refresh cycle was expected. For example, you get a huge surge after the iPhone 5 replaced a long wait in 2013, and then again when the company released that iPhone 7 and that list of other products in 2016. The problem going forward is that it looks like Apple is trying to move away from these big events around their releases. The recent rollouts of the iMac and the iPad were nothing more than press releases, and the iMac Pro didn't even get that. Now, some of this has to do with the fact that those recent upgrades were incremental at best. The iPhone is still a big chunk of sales and has a fairly regular upgrade cycle, so we should still expect those big September events to highlight those new iPhones coming out. On the upside, 2019 is expected to be a pretty big product refresh for the company, with just about every hardware line getting an update. We're expecting 3 new iPhones this fall, with 2 of those supporting that new OLED screen versus that older LCD model. OLED has far better contrast and can be viewed from pretty much any angle, but it's also more expensive, so expect the price tag to show in those new iPhones coming out this year. Now, the new iPhones are expected to have a triple camera setup on the back of the phone and an upgrade to the front True Depth feature, which could make it capable of producing a 10 megapixel image. Shares have bounced 14% off their May low, with part of that being these new product rumors and part the easing trade tension with China. The refreshed product cycle is definitely a positive for the stock, but will it be enough to drive the shares higher? So let's look at some analyst price targets, and then I'll share my price target for Apple stock as well as a recommendation. First though, if you're liking the video and the information, do me a favor and tap that thumbs up button below the video. Now, Apple is one of the most widely covered companies, with 36 ranked analysts providing an estimate. The average analyst price target is just over $213 per share, which is about 6.8% above the current price. Those estimates range from $250 on the high side, so a 25% upside call issued by Jim Keller over at Argus Research, versus a low target of $150 a share by Jun Zhang over at Rosenblatt Securities, with a sell rating and that 25% downside. Now, deciding on whether to buy the shares of Apple means putting all this together, that fundamental analysis along with those market news. Right now, it looks like everything is revolving around sentiment for the stock. So how much are investors willing to pay for the Apple brand and those earnings coming up? Will investors continue to offer that 16 to 18 times for earnings? on that $12.58 per share earnings target, that would mean a between 201 to 226 per share over the next year. But what if investors back down to a range of maybe 12 to 14 times earnings? That would mean a target of between 151 to maybe 176 per share for Apple. So here you've got to ask yourself, will that September refresh in the iPhone be enough to boost sales and earnings above expectations for this year and next? A lot of the recent bounce back in the shares has been on those price cuts in emerging markets, so improving sales but at a cost of lower profitability. Now, considering investors in Apple have always pointed to the company's high profitability compared to its peers, I think pricing on the new phones in September is going to come out at a premium to protect those margins. Will the overall economy and new features support that pricing? Personally, I got to tell you, I see a bigger downside risk in the Apple stock price right now versus that upside potential. Obviously, this might change depending on when you're watching the video, but that midpoint between 151 and 176 per share is 18% lower than the current stock price. That midpoint on the high side of between 201 to 226 per share is only about 7% higher, so lots of downside for a limited upside potential. Now, Apple is a solid company and can be part of your long-term portfolio. Keep an eye on these fundamentals that we've talked about in the video and consider holding off for a better price. Check out that analysis for Ford we did in our last video by clicking on the video to the right. Ford has a monstrous 6% dividend, is in deep value territory, and I found some solid catalysts for a higher stock price. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.